Hello everybody and welcome back to Teachers Talk Money, where I help teachers master their money in order to give back to themselves. So it has been quite some time since I've actually sat down and filmed a video for you all. Obviously some of the content that I was able to film and schedule out over the summer has still been on autopilot, which is amazing, but many of you did notice that I missed my February net worth update as well as my March budget update. And that is simply because I was feeling extremely busy and stressed and overwhelmed with my work as a teacher and a coach. We were kind of coming up on the volleyball season when I was scheduled to film those videos, and I just couldn't do it. And as you guys know, this is not my full-time job. I basically have what feels like two full-time jobs as a teacher and a coach outside of this, as well as a life. And so unfortunately it just fell by the wayside, but hopefully that will never happen again. And I want to catch you guys all up to speed with this video. So instead of just talking about my March net worth update, we're going to recap February briefly first as well. And it's been an interesting few months because when I captured my net worth in February, the market was down so much. So you're going to see some fluctuation here, which I think makes it even more interesting. So to go over February's numbers, I'm simply going to put up a screenshot of everything all together so that we can just quickly look at it, and then when we go to review March's numbers, we'll take a look at all of the totals from the past 2 months. So here are my totals from February. As you can see, I lost quite a bit of money passively in my investments because, as many of you are probably aware if you're investing or if you're just kind of paying attention to that news, the markets went down at a really rapid rate between when I had captured it in January and at the end of February. So my Roth IRA decreased by $1,408, and I hadn't contributed anything, so that was all decreased passively. My 457 increased in total because I was still contributing quite a bit of money, but saw a passive decrease of $1,093. But all in all increased by $442 because I was still actively making those contributions. For my pension, as I speak about in many videos, I only track the contributions that I make to it because that's all I have access to until it vests after I have been employed with my district for 10 years. So that's around $13,000 now, or by the end of February it was around $13,000. And that was also an increase of $442, and simply based on my contributions. I also always include my supplemental pension, which only updates once per year. So since June of 2021, it's been at $798. My emergency fund grew by $1 when I calculated my net worth in February, so it was at $5,047. And finally, we have my other savings. Those were around $4,723 for an increase of $219. Not very much. I've been contributing a lot of money to my savings, but also spending quite a bit of money in my savings for travel and gifts and charitable contributions and things of that nature. So it kind of just fluctuates random amounts each and every month. So by the end of February, my net worth was $57,791, and that is actually down from January by $304. So because of those deep increases in the market, even though most of my accounts had increased a little bit in amount, I still saw a negative change. Now that being said, obviously I don't ever like seeing my net worth go down, but $304 wasn't too difficult of a pill to swallow, considering how rough the markets were. And that at the time brought my year-to-date change to only $1,548. So that was February, and I'm going to move on to March now and go a little bit more in depth with each and every one of these numbers, and then hopefully put everything together and give you all some context. If I went over those February numbers too quickly, feel free to leave a question in the comments below. All right, on to March 2022. We'll go through each account individually, starting with my Roth IRA. So my Roth is now valued at $17,027, and that is up $672 from last month. Now keep in mind that's still an overall decrease I think for the year as a whole in the passive income that I've gotten here because it decreased so much last month in February. I did not contribute any money to my Roth IRA this month, and therefore all of that increase was once again passive. Hopefully by the next net worth update, or maybe within the next 2 or 3 net worth updates, we'll start seeing some more contributions to my Roth. I haven't contributed anything for 2022 because my investment plan for that account is to put my tax returns and my stipends that I get from sponsoring the school newspaper and coaching at my school all just dumped into that account. And I may be getting my tax returns soon, so hopefully we'll see that come through. Let's move on to my 457B. This is my employer-sponsored retirement plan that I have through my district. It is now valued at $19,099, so we're getting really close to that 20K mark for this account, when we should be there by next net worth update, hopefully. And that increased by a total of $1,376. That being said, most of that increase, once again, is from my hefty contributions to this account. This is, I have 17% of my paychecks automatically going straight to my 457. So when you subtract the contributions I made, this grew passively by $362, which again, it's good to see some growth, not quite making up for the decreases we saw in February just yet. But I'll put that into context for you guys in a couple of slides here. Then we have my pension. I actually contributed a little bit more to it this time around just because my pay is increasing. I think in this month it was just a matter of I had covered for some classes, and so the percentage that's set to go there just came out to a little bit higher of an amount. So it's up by $450 for a total of $13,595. And again, I'm only tracking my contributions. I am looking forward to the day when I've been teaching for 10 years and I'm able to include the interest in these net worth updates. But for now, I only have about 3 years vested, 4 by the end of this year, so we've got some more ground to make up. Then we got my supplemental pension, which I've already talked about, $798. Next, we have my emergency fund, which grew $2 in interest this month for a total of $5,049. Not a crazy amount of interest. This is a high yield savings account, but as most of you are probably aware, interest rates are kind of down in the dumps right now, so it's pretty much the best I can ask for. And that finally brings us to my other savings, which are valued at $5,398, and that is up $675 from last month. Once again, I think I saved in total more than that. Like, I usually save around $700 or $800 to these accounts in a month, but I also use them when things come up for Hattie or travel or gifts or whatever it may be, and so they sort of kind of fluctuate unpredictably month to month depending on how much I can set aside to save and how much I need to actually withdraw from those accounts in order to make purchases. So here are all the totals. Everything together comes out to $60,966 for a really massive, relatively for me, monthly change of $3,175 and a year-to-date change of $4,723, and that includes the decrease from the month of February. Really, really excited to pass the 60K mark. My goal this year is to see about 25K growth for the year. So it's good to see that we're almost at that 5K mark for the year to date, and we're in month 3. Still got some ground to make up, but that's all right. For a little bit of context, here are my totals year by year. In March 2020, my net worth was around $21,000. It grew pretty massively in March 2021 for a total of around $47,000, which is basically like over a 25K growth in a year. I think that might have been mostly due to stimulus checks, or I had gotten my tax refund a little bit earlier to see like that little bump there. Because this year, it's not quite as significant as a growth relative to last March. That being said, it's still growing at a pretty steady rate, and I'm, much more interested in, am I taking the right steps day by day and month by month versus the outcome, because you can't always control that, which is something that we can maybe see from my numbers in February. And finally, we have my passive income slide, which I really like looking at, and this one is particularly interesting. So in January, my investment accounts only grew by $125. And again, I think it was just a matter of those markets starting to tank, because that's not really a lot of passive growth for the amount that I have contributed in those accounts. And then in February, it decreased by $2,501, pretty massive. And finally in March, we're starting to see a little bit more passive growth, $1,034. So for the year to date, it's currently a change of negative $1,342, which I don't know. I mean, I'm pretty interested to see if the markets are going to, start growing at a steady rate again. And if so, if I can make up for that loss in the next month or two. I don't know, it totally remains to be seen. That's sort of the fun of having your money invested in the markets. Okay, so to give us even more context, let's take a look at my net worth graph. This is one of my favorite pieces to look at because I feel like it just puts everything into perspective, which can be really important, especially if, you're feeling overwhelmed or stressed out or unsure because of market decreases, which was the case for me and probably many, many other people in these last couple of months. So as you can see on the graph, there are two really big dips, and those are summer 2021 and 2020. And that's because in the summer months, I live off of my savings, and so my savings accounts decrease, and I'm not taking in any income to recontribute to my savings or investment accounts for the months of July and August. And the trade-off with that is I obviously get to have my summers off, which is amazing. I get to work a lot on Teachers Talk Money and sort of just kind of spend a lot of time with my friends and my partner and my family and my dog and myself. But I am sort of trading that freedom for a decrease in my net worth and sort of the missed opportunity of taking on extra income in order to grow it more over time. So those are the two main dips that you see here, and there will likely be another one this summer. I'm not exactly sure what I'm going to do about employment, but I'm thinking most likely I will take off again. You can also see that tiny dip there from February where it went down by $304. And while it doesn't feel good to see my net worth decrease, it does make me feel a little bit better to look at it in context. And, on this graph, it almost basically looks like a straight line. It's a very, very small decrease compared to the increases I see most months. And even in this month of March, seeing such a steep incline there does encourage me and make me feel better going forward. And this is the thing to keep in mind, right? When you have so much of your money invested, a lot of that growth or decrease is going to depend entirely on what the markets are doing and less so on what you as an individual are doing in that exact month. The important thing is to invest early and invest often, and to see these market dips as an opportunity, if you are far out from retirement, to contribute a little bit more money perhaps, or just stay the course and stay steady, because when stocks are devalued, they're essentially on sale. You get to purchase them at a lower price and see it grow even more because of that. Now, I totally understand that that is from the perspective of somebody who's very far out from retirement, and that market dips can be extremely stressful for those individuals that are retired or are close to retirement. But for the rest of us, we can choose to take a more positive look at it as an opportunity. And I think that helps alleviate some of the anxiety that might cause. Market dips happen, crashes happen, but it's important to stay the course if you can, if you're a long way out from retirement. And part of that might just be changing your thinking from seeing it as a negative thing to an opportunity. In terms of my reflections for these past few months, I have not been thinking that actively about my money because like I've said, I've just been so busy with teaching and coaching. But these are the times that I am most grateful for the systems that I already have in place with my budget and with my net worth tracking. Even though I didn't get to film the video for you guys, I did track my net worth in February, and it's so helpful for peace of mind, and it's so helpful for these times when I don't really have that much time to spend on my money, but I've already got everything set up, so it's pretty simple to just go in and check on everything. That is not something that I need to push to the wayside because it frankly just doesn't take that much more time or effort at this point. And same thing with budgeting month to month. So even if I wasn't updating my budget every day, I was at least going in every now and then to check my credit card statements and my bank statements and add in everything that I had spent. These things are important all the time, but they're especially important during the times in our lives when they would otherwise fall by the wayside because other things take priority. That being said, it is really exciting to see that I've passed the 60K mark, and I can't wait to see how long it'll take me to get to 75K, because that's really the next big milestone, at least in my mind, for my net worth. The next couple of months of net worth updates should be very interesting because, like I said, I'll hopefully be getting my tax returns soon. I believe my stipends will hit my account in May or June. So I look forward to updating you guys along the way, as well as keeping an eye on these markets and, seeing their impact on my finances as well. I hope you all have a fantastic week, and I will see you in the next video. Bye!